2, 1.
Welcome to another episode with Inventure Capital, Inventure Real Estate, and today we have back from the Dominican, looking tan as ever. We got Doug back in the podcast here with us, and YouTube and everything else here. Today our plan is really to dive into what 2026 looks like from a capital markets and investing standpoint, interest rates, what's going on a little bit in the economy, micro, macro effects, and then kind of what we're looking at for 2026 for assets we currently are working on, projects that we have, and giving everyone a little deep dive and kind of what we're really looking for, right?
Yeah.
So
thanks for having us, guys. And again, it was a great trip. Great to get away for a little bit.
yeah, I bet it was.
Show you some wish you were here pictures, so
Yeah.
hopefully you didn't cry for me too bad. But
Yeah.
no, if anybody does get the chance to head down to the Dominican, it was a great trip. We went to this little community of Miches, which is on the north coast a little bit. But yeah, it's great to go and great to be back because there's a lot of things going on this year. This real estate market is definitely heating up. We see a lot of activity, a lot of things that are kind of staged from last year's bill that came out in when was it, July, I think?
Something like that.
The new Trump bill came out, which really started to kind of lay some groundwork for some of the changes in commercial real estate this year. So maybe, Austin, just lay out a little bit of just what, now we're 6 months down the road, and what are the things, headwinds and tailwinds that we're seeing in some of the market?
Yeah, I mean, to me, what we're seeing, it depends on the sector, right? But we're seeing interest rates continue to go down, right? So interest rates are always the biggest driver in commercial real estate and in the economy in general, right? When that goes down, everyone feels like they can buy, even if they shouldn't buy. But we're seeing it with stuff coming out to market more. We're seeing it with deals that we're actually trying to put together, right? They just make more sense. And the biggest thing of it, if you think of an interest rate, if I buy something at a 8 cap, let's call it 8, so an 8% cap rate, which is how you drive the value of the real estate. So if you had a net operating income of $100,000 and then you divided it by 8%, that's what your value is, right? So $800,000 would be your value from that look. If you have interest rates that are 7%, that cushion is just too small, right? There's no real delta for an investor to make money at it, right?
And that cap rate is really the capitalization rate.
Yeah.
We shorten it in the market for that purpose. But for the viewers, right, that cap rate is really what drives the value ultimately of the property, right? So when we're looking at projects, and we can buy something at a 7 cap or we can buy something at a 10 cap, totally different values for each one of those properties.
Correct.
And with the cap rate starting to drop a little bit, that just means that the value of the properties maybe that we hold today in the portfolio are gaining some value back again.
Yep, that's exactly it, right? So they gain more value, they add additional things, so it's just worth more, right? Because people feel like they can pay more for it than what they could before.
And I'll say from 2 years ago, people's balance sheets on a portfolio like ours might read one number, interest rates climb, so does the cap rate, because the cap rate will typically follow. And so you might see a paper devaluation of a property due to interest rates, but now with that curve starting to drop again, we're seeing values that are starting to rise. So this is a prime time to purchase properties because you can still buy it at a 8, 9, 10, 12 cap, and as interest rates drop, the value of it might drop to a 8 cap or something.
Yeah, they'll kind of drop as rates go down. The pricing will go up for the real estate just because you can still make the same amount of cash on cash returns or whatever it is, right? And that's how a lot of people end up pricing their real estate out in the end.
And are you seeing any of the sectors, whether it's office, medical, institutional, warehouse, things like that, are any of those markets really, I'll say it from go back 2, 3, 4, 5 years, are any of those markets really on fire at this point, or are they all just kind of re-correcting now and they're all kind of chugging along at that same pace?
Re-correcting, so I would say office is still the one that's out of the look for everyone, right? Your big institutional buyers aren't buying office at all. I don't see that happening or changing anytime soon, right? You got your downtown stuff is just terrible. We've met with a couple different people who represent that stuff, and I mean, you're trading stuff at $10 a square foot compared to stuff that used to trade at $300 a square foot. And I don't see that coming back for a very long time. Just to be honest with everyone, right? But your suburban office, if you have the right product, there will always be a good tenant and I don't know if there's necessarily a buyer for it right yet, but if you're a landlord that's well capitalized, that has dollars to put in for tenant improvements, you'll be fine. But what we're seeing from what we've been hearing in the market is that a lot of landlords don't have the capital, so they can't get new tenants because they don't have the capital to put in for today's construction rates, right? Because back in call it 10 years ago, what was cost per square foot to build out a space?
Yeah.
An office space?
I mean, 70, 80 maybe.
70, 80, yeah, and that today is 150.
And that's where I was going to go real quick, is to think about, like, that's the opportunity in office a little bit, is the fact that there's still only so much office that's been put on market, right? Sure, there's some, deflating vacancy rates in some areas, but you still can't build a new office building.
Yeah.
You can't. I mean, that number is by far 2 to 3 times in some cases more expensive than finding an existing office, working with a team like us, finding the investors, finding the capital, and actually partnering with us, right?
Yeah.
We've had a lot of success in that.
Correct, and that's the tough part, right? It's the cash that goes into it, and it's the planning that really goes into office. Today in office, you got to buy it perfect, and you got to be well capitalized, and you got to have the dollars in it to make sure that it works over the next 10 years. Because if you don't, you're going to be in a bad spot, right? If you were an LP investor, like looking at different office products, look at how your GP is going to be using the cash and where it's going to be going, because if you don't have the cash, you won't do assets, because tenants are not going into spaces without high TIs. Mm-hmm. And renewals are costly, right? So office is just a more costly product, but you can buy it at a higher cap rate.
Yeah, and office specifically, I know some of our assets, even like Egondale behind here, we bought very strategically, right,
yeah,
in these locations. And so talk about a little bit, because we just filled up one of our office buildings over at Corey Center, correct? Mm-hmm. We've got a new tenant that'll be opening the doors here in about, 2 months maybe, milestone? 2 or 3 months. And you worked with the team over there to get that project across the finish line. That was actually an asset we had bought, and the tenant had left. Austin and the team literally backfilled it almost within 2 months.
Yep.
And this was kind of a space that was just left open, about 3,000 square feet in about a 30,000 square foot building, which by itself is actually a really good vacancy rate. Mm-hmm. This building will now, come March 1st, will be 100% and cash flowing very nicely for the investors.
Yep.
And on a long-term basis. We didn't just kind of short fill it, just to...
Yeah, found the right tenant in the right situation, expanded them, and allowed them to extend for 15 years. I mean, they're going to stand there for a long time, right? But that's how you win an office, is you have the right team that's working on it, right? The right team that is on the ownership side, that can connect with the tenants, can also connect with the brokers bringing deals in, so that you get the deal across the finish line. You can have that owner to broker conversation of, like, what are we going to do to get the deal done?
And with us doing the construction in this case as well, we're holding that tenant's hand the whole way through.
Correct.
So, from the leasing team to our construction team, that tenant never lost us. They were in our grasp the whole time, so we could walk them through pretty quickly too what pricing was, what are the options, and ultimately get the deal done and go right into construction.
Because we like control. I mean, look at the stuff that we've done. The stuff that we've been really successful in has been stuff that we have 100% control in all aspects, right? When we don't have control, it's just not what we're really good at, right? We like having control all the way through.
Another 2026 project that's just coming out of the ground is our hotel for Wyndham, right? So we're actually, this morning in about 15, 20 minutes, they'll start erecting structural steel going, we call it vertical in the marketplace, right? So once you start going off the slab that's been poured, we've got a building that's actually laying in the shop yard right now, completely constructed. So we've got 4 floors of wood panels ready to start flinging. So viewers out there, just watch out, because you're gonna see a building come out of the ground really quick now. Probably within the next month and a half, we'll be capping the building at 4 stories and starting to put a roof on it and bringing it really to life.
Yeah, it's crazy how fast that thing goes. It hits that stall period in the Midwest, right? When it gets cold, there's snow, and it's negative 10 degrees outside. It's pretty tough to build, so you kind of you roll with the punches.
Absolutely, and that's been the case for the last couple of weeks. We just kind of shelved the project for a little bit, let the snow and cold get through, and now we're going to bring it back to life. But by about mid-August, we'll be having ribbon cutting and celebrating our very first hotel development project. So that is going to be super exciting. I was in the Dominican, and I'm getting these texts back and forth going, hey, are we going to sign this thing? Are we going to get it done? And it was a new deal that you and Ross put together just in the last couple weeks. But you maybe talk about the length of time that it took to put this deal together, and I'll let you announce it to the viewers. But you guys had seen this deal and kind of gone quiet. Maybe give us the big scope of how that project.
Yeah. I mean, this project, just like a lot of stuff in real estate, is all time-based, right? But like we talked about just a little bit ago, with this building we bought, it was buying it right. That was our biggest thing, right? So in the asset, when we put it together, we saw it a couple times. We knew it very well. It's very local to us. And it just wasn't the right time. We're like, yeah, that price doesn't make sense. The price doesn't make sense. Just like we talked about how the cap rate and the interest rate depression wasn't there. Well, we were at that spot before where it was still like a good margin, but like it wasn't what we wanted it to be. And more importantly, the second use wasn't available because the price was too high.
Sure.
Right? So this is a single tenant asset that we've looked at, for probably 6 months now-ish. And we finally got the deal put together, got the LOI agreed to. Now we got the purchase agreement that we're putting in place. We have the investors lined up. We have everything kind of running and gunning for this thing to close in the next 2 months, which will be fantastic. Yeah. Because it's a good local asset, single tenant, which is some of the stuff that we're looking at hard in 2026. Something that we can plan for more of the long-term real estate. Like, where is the location, right? We want the location to be prime.
And what's the project again?
Yeah, so it's a Walgreens. So we're buying the Walgreens in Sauk Rapids. So again, very local to us up here in central Minnesota. But also we know when it was constructed, we know when the road was put in. So like we just know that location, and it's prime coming right over the bridge and you see it right away, which is important for us. So it's an exciting one for us to look at. It's an exciting one for us to go down the road on, put financing on, and continue adding to the portfolio.
The really cool part about these kind of deals, these single asset deals, and anybody watching out there, whether you're a broker, agent, somebody that knows something about some piece of real estate, give us a call at all times. Like we underwrite a lot of projects over the course of a month and over a year. But this particular asset we're buying, once we close, it's cash flowing to the investors month 2.
Correct.
We basically take a month off, we get all the books in line, and then we basically start.
Then we send distributions.
And we start sending checks out the next month.
Correct.
And so that's a really unique way that, if you have development, you have to wait for the
12 months.
cash flow to come in, right? Like our hotel. But these types of projects, we literally can turn the cash flow on immediately. So when we do that type of thing, you and Ross are working on the purchase agreement, and then Kelvin and I are working on the capital stacks. This capital stack came faster than any other capital stack we've done. I think we raised like $1.5 million in 26 hours, I think Kelvin did, which is a testament to the process, but it's also a testament to the asset, right? When our investors got the email that this thing was coming out, Kelvin's phone lit up in a matter of minutes, and people that have been new investors, some existing investors, that just said, I want this, I want a piece of this action. And now more than ever, our process is really like that. So for the viewers who are out there watching us and following, when you get this email from Kelvin or one of our investment teams and they're pushing out a new product, it is first come, first serve. And so, making sure that you are on top of our list. If you're not on our list, ping us at, I think it's invest@inventurecapital.com.
Inventureproperties.com.
Properties.com. And get on our list, call myself, call Austin, call one of our teammates to make sure you're on our mailing list. Because, and also just check your spam. Sometimes the weirdest things happen with spam. If you're not getting that, and you should be, check your spam, check your junk box, because it might be going in there. But we've been really amping up a lot of our information coming out about our assets, about new assets, and we really want to make sure that if you're wanting to invest in those deals, follow us on this channel, follow us on all of our stuff that's coming out right now, because we're pushing a lot harder effort this year to make sure we're getting communications out to our investors and future investors as well. So when we're searching for these projects, like think about if we're kind of covering the upper Midwest at this point. Like if an agent had a deal and they're like, I'm struggling to find somebody to buy this thing. What should those agents or brokers, how should they package that so when it comes into Ross or yourself, that you guys go, oh, this is something we should really look at underwriting because this is a reasonably good deal, or it's a great deal in some cases. And a lot of our assets, and I'm kind of bringing this all around, is that a lot of our assets have come because of really good relationships and collaboration with other agents. And I think sometimes agents don't get the sense that we work with people because we're just autonomous and on our own. But that's not the case. I mean, we need deal flow, and that velocity of deal flow comes through our investor or through our broker network, our agent network. And so if I'm an agent in Omaha, Nebraska, how do I package something up to show and venture that this is a good deal and they should come down and take a look at it?
Don't hold it to your vest, right? Be outward. Actually explain what it is. The deals that we've gotten done with good brokers and why we work with certain brokers is because they'll tell us the straight skinny of what's actually going on in the real estate. Groups that don't, it just makes it that much harder for us to underwrite and put together a pricing mechanism that actually works for the seller and for us.
So our cards up philosophy even applies to agents, brokers in this case.
Yeah, because otherwise we won't touch it. Like, you just send me stuff and you're coy on what pricing is, we'll be like, we'll put it to the back of the line. We'd rather work with a broker that we can understand the exact skinny on it, if we should look at it, why we should look at it, what's going on in it, what's going on from the operations. Can we talk to the landlord? Can we have some of those things to actually understand the real estate?
And the things that we're trying to really, kind of vet out is going to be, who is this tenant?
Yeah.
How long, if you're representing that there's a 7 walt left on it or something to that effect, what's the chances that they re-up?
Yeah, and the problem with the 7, like a single tenant, but walts to me are a little bit misunderstanding, right? Because you can say you have a 7 walt, but that doesn't necessarily mean it works for the financing, right? It's because you got one lease that's 10 years and you got a lease that's 2 years.
Sure.
Perfect. You got a 6-year walt?
Yep.
Well, what happens when the tenant with the 2-year walt leaves? Now the building doesn't cash flow. Okay.
And that walt, just so the viewers can understand, that walt means what?
So it's a weighted average lease term. So if you look at a piece of real estate that's got 10 tenants in it, and each tenant has a different amount of years left on their lease, one might have 10, one might have 2, one might have 1. You're just weighting the average of it, just like you're doing an average of 5 numbers, essentially, to look at how long your lease rates are within the building.
And so, again, I'm that agent bringing it in. When I've got a good deal, maybe it's a single tenant, maybe it's a multi-tenant, but understanding how the deal is structured so that when they're talking to us, they can quickly say, here's the cap rate that this is performing at.
Yeah.
Here's the cap rate you might be able to buy it at. Here's the walt. What are other things that agent should have packaged up and ready for us so that we can underwrite it? I mean, like this Walgreens, you guys underwrote this in about 2 days, it felt like. Yeah. Obviously worked on it a lot longer, but because it was packaged really nicely, right? You can see the data quickly.
Yeah. Well, single tenant assets are so easy, right? They manage everything, they do everything. We're not really doing anything for that piece of real estate, right? It's more. But
you might have others that there is more management, or there are
correct. And in those circumstances, we're looking for what's the due diligence, right? What are the capex that's been done? What's the money that's been put back into the building, or has the landlord just been sucking the cash out and not reinvesting into the roof, the HVAC, parking lot, and all those things, right? Yeah. Those are the main things, because those just check off little instances, not for us even, but for the investors, and more importantly, the bank, right? The bank is the biggest investor in any one of these deals.
Absolutely.
So if we don't hit their check boxes, it doesn't work for us.
And so when we think about this, and we think about the year coming up, and we've probably got, what, 20, 30 million, maybe $40 million in deals already kind of placed for 2026. And our goal, our big, hairy, audacious goal is to do $100 million a year.
Ross told me we're doing $100 million this year.
All right, then Ross is the man. We're doing it.
So we're doing $100 million.
So, but what deal sizes fit us really well is what, right? So if somebody's sitting down, again, I'll use that Omaha agent, is it $1 million? Is it 20, 30, 40? Like what's our scale?
Yeah, I mean, to me, I say we're very flexible in scale, right? If call it sub $3 million, it better be a single tenant asset with a long lease in place. Otherwise, it doesn't make sense for me, and it better be a creditworthy tenant in the prime location, AKA a Starbucks, right, or something that real estate's never going away. It's the perfect corner. It's got the vehicles per day. It works. Buying the $1 million product off of a side street with a ABC tenant that's not creditworthy probably doesn't make sense for us. Yeah. But then even from that, right, then we can continue all the way up to, I mean, the biggest deal that we've done today that we're looking at is 25 million. So I would say we're anywhere from 1 to 25. And can be very flexible anywhere in between. It all just depends on the project, right? We'll look at single tenant stuff all the way up. We'll look at multi-tenant stuff, multi-story stuff, kind of whatever it is to make sense from a real estate perspective. And really a lot of times we're looking for situations. We're a great situational buyer, right? When we can find a spot where the seller's got to sell, we're the group that can work with you, talk with your bank, be your partner in it, and then we can help transfer the real estate out so you don't have the issue anymore.
And we just had a new agent start this last, I think 2 weeks ago now. Bill Molitor came over, and I've known Bill for years, just a great, solid team player. And I was talking to Bill the other day, and I said, Bill, it's so exciting to have you here, right? Because he's going to have the opportunity now to bring deals that, you know, that he may have in the past not gotten done. Because he was kind of on his own, didn't know about us and how we operate. And now he can actually get stuff done. And I think about that from all aspects of when we look at our win-win-win scenarios, that agent that never got the deal done before doesn't make money either. So we always talk to our agents and saying, listen, don't take deals that you already know aren't going to get across the finish line. Why would you take the representation?
Why would you waste your time?
Why would you waste your time? And I think that's a big key element for a lot of agents. And obviously when you're starting out, you need to take just about anything. But as a seasoned agent, you know, I still see people take stuff that are like, why are you doing that, right? It's either hurting your brand, it's hurting your time, your pocketbook, right? You're not putting commission checks in your pocketbook at the end. And that's why I think when we look at the whole ecosystem of how InVenture works, that's what's really fun about the collaboration, because we collaborate with all of these different people, contractors and surveyors and all this, you know, across the whole platform. Everybody's winning, right? So we're able to bring dollars in and then push it out to some of our other vendors, so that not only does, you know, the surveyor makes the money, but, you know, the geotech people are making money, and maybe the contractor makes money, and the real estate agent, closing, title, like all that stuff is, we might be outside of our boundaries of Minnesota even, but those dollars actually still come back to St. Cloud for some of those, for some of that work. And so we're really helping our local economy bring in some of those dollars in as well. So when we think of 2026, is it brighter than it was at the beginning of the year, or darker than it was at the beginning of the year, as far as like just overall?
You mean 25, like different than 25?
Different than 20,
yeah. I would say it's brighter in my opinion. I mean, rates coming down is huge. Obviously the political atmosphere is hard for real estate because it drives where institutions put their money, right? So from a selling aspect, depends where you're at, right? Like being in the state of Minnesota from a selling aspect isn't the greatest thing right now, because REITs aren't buying in the state of Minnesota for the most part. But when you look at rates, when you look at, I mean, I was talking to a few contractors earlier this year already, and they got work for next year or this year booked. Like there's work, right? There's construction work, there's labor stuff going on. So that to me says that we're gonna have a good year in 26 overall from a construction standpoint. And then I think from an asset standpoint, because from what I've been hearing, there's a lot of stuff that'll come to market. And I don't know if there's a lot of buyers for a lot of the product that's gonna come to market, unless you're groups like us. And there's not a lot of groups like us, honestly, especially in this state, trying to do deals and put structures together to make it work, right? So you take advantage where the people don't want to be, because just like everything, every cycle, right? What goes up comes down. What goes down comes back up. It's just how the way the world works. So if you buy right in the right area and you have the right mentality and the right drive and you're obsessed over the right product, in the end, 5 years from now, you'll be sitting on stuff that's like, wow, how did those guys get that for that price?
Yeah, I even look back and look at some of the deals that we saw 2-3 years ago. That the price that we bought at and the price that just pure value to value, right? I mean, it's incrementally gone up through appreciation without even the market shifting. And in fact, the market dropped, but the value still went up a little bit because of what the cost of construction is and stuff.
Correct.
So wrapping it up, kind of, we're solutionists, right? You know, I love the way you said it before, is that we can figure out ways of putting deals together in real estate to build wealth for others, whether the others are the people that are bringing the deal in sometimes. We've had agents that came back into deals but we work on the solutions part of it, right? We're not just a cookie mill or a grinder for deals, right?
Yeah, we're not putting every deal together.
No, we're going to look at stuff very specifically, strategically, and then apply a lot of effort. If it's the right deal, we're going to close that thing.
Yep.
I think our track record today is still, we signed a purchase agreement. We've closed 100% of our purchase agreements that we've put together. We've never once went back and said, oh, we're going to back out of this. It's not the right deal for us anymore. So again, as people are, in the market, you hear somebody wanting to own a building or they can't raise capital. You're talking to your buddy and they want to expand their machine shop and they don't know how to do it. We are a full spectrum. Our ecosystem handles everything from owner's rep to construction to real estate to solar to all of those things. But the bottom line is we're solutionists, and we will come up with a solution for that challenge that someone's got in real estate.
Yep.
Close us out.
Yeah, I mean, so for us, thanks for following along. Thanks for listening here today. I learned a little bit more about what we have for 2026 and kind of where we see some of the market, and also how you can kind of work with us. So follow along, like, subscribe, send us a DM. Let's connect and find ways that we can do deals together here in 2026 and make it a dang good year.